Welcome back, everyone, to today's market recap. This is essentially the ultimate way to study. I'm doing all the work for you. All you have to do is sit back and relax, and I'm going to be showing all kinds of different trades you could have taken today. So, with that, let's talk about the market and what happened. Going to the market, it was important to have a bearish bias. Yes, we had been trending up, but once we get these two bearish SMTs and then start reacting off of key levels like this, here you had this 2-hour order block. So if I go to the 2-hour, you can see how this becomes a 2-hour order block. So 2-hour OB. And then right here, this is a 1-hour OB that becomes a propulsion block, right? And you remember, propulsion blocks are very, very explosive, and you run essentially everything in your path when you react off a propulsion block. So you can see here, if I pull up our session highs and lows, we had a giant liquidity pool here. We had New York PM's lows and London's lows essentially perfectly relatively equal. This is a giant liquidity pool. The market was drawing towards these lows. As well, we had London's lows from over here, Asia's lows from over here, and we had, where is it? We had previous day's low right here. So that was overlapping with Asia's lows. All of these combined were significant draws for the market to go lower. And so the market seeks to run through old highs and old lows. So when you see the market get SMTs like this and then start reacting off of bearish levels, that should give you a hint that the market actually wants to go lower. Even though it initially seemed like maybe we were going to be bullish because, well, it seemed like the market was initially bullish. Once we get signs that the market's actually wanting to go to the downside, we need to flip our bias. So then we had this 1 hour for value gap, and then let's talk about a trade you could have taken. So here's that propulsion block, 1 hour propulsion block. You can see how explosive the market gets off of that. And then we had this 1 hour fair value gap. So dragging this over here, you can see the market filled that incredibly well. And yeah, dropping down the lower time frame, the first thing that happened is we get this amazing inverse for value gap delivering from the propulsion block. So this on its own would have been an amazing trade. You would have had to been on the market. You would have been watching the charts at 8:20. I don't even start watching the charts until 8:30. And today I had issues. I couldn't get up. I filmed my video, but then I accidentally fell back asleep. So that's on me. That's my own fault. That was kind of sad. Anyway, you can see how we got this inverse for value gap delivering from the propulsion block. If you entered here, stop loss probably above stop loss. If you close back above this inverse for value gap, right? Imagine if you just left your runners to go target Asia or New York PM and London's lows. You would have got a 9-to-1 risk reward trade. You don't need to do that though. You don't need to do that at all. You could even target these lows for a 1.5-to-1. So you can see how a 1.5-to-1 risking $200. This is a $300 profit trade, and you're doing a 1.5-to-1. You don't need insane trades to make a lot of money. You make $300 off of this. If you take this down to here, well, that's a 9-to-1. You could make, that would be like $1,800. But once again, like, you don't need crazy wins to win to make money in the market. See how we deliver from this high confluence area, this propulsion block, and then come here, boom. That's $300 right there. See this inverse for value gap? See how clear and obvious this is? Inverse for value gap. Once we close below, stop loss is a candle body close back above this old bullish for value gap. And then you simply target, I guess you don't want to target there, but maybe target this low. That's a 1-to-1, and once again, you're not stopped out because this inverse fair value gap held. We did not get a close back above. Your hard stop loss is a little higher, and you can see you hit that 1-to-1. Boom, that's another $200 right there, and stop loss to break even right here. Stop loss to break even, and you could have had runners go even lower. Maybe you saw that these were equal lows. Then you would have hit a 2-to-1. That would have been $400 right there if you're risking 200 per trade. So you can see how this stuff is really, really powerful. Now, the trade that I saw going into the morning was, well, I just barely had gotten up because I accidentally, once again, I was saying I accidentally fell asleep. You can see this failed. We had this fail. And this failed because look at this giant liquidity pool here. We have New York PM's lows and London's lows that are just a giant magnet on price. This pulling price down. And we had these giant SMTs and we had this propulsion block. So the market, the higher time frame bias is so important. And you can see we just dump straight through and then run all the rest of those lows. So you could have taken this 5-minute inverse on its own, but I like to be a little bit more precise. I would have taken, this is kind of an advanced trick, but remember you can take 2 candle bodies as one fair value gap. And so I would have entered on this 2-minute close below these 2 bullish fair value gaps together, and stop loss back, a close back above these 2 bullish candles. If we close back above, that would be my stop loss. Hard stop loss a little bit higher, but this would have been a 3-to-1. I mean, this would have been a 3-to-1, 3.2-to-1, just depending on how far above we would have closed. So, I mean, you could have targeted lower, but in all honesty, this is such a strong draw on liquidity with good trendline liquidity. I would just target these lows. I think this is a fair target, and you can see the market did just instantaneously dump and give you that 3-to-1 trade. And imagine if you took this down even further. Imagine you took this down to Asia's lows, which was previous day's low. This would be a 17-to-1 trade. So you can see if you can use the higher time frame context to be able to outline a trade, you're going to do really, really well. So we need to figure out what daily profile it was. I actually haven't figured this out yet. I'm not going to figure it out right now because it's going to take me too long to figure out. But if you know what daily profile today was, let me know. And then let's talk about some trades from some people. So Dodgy took this, but he messed up and got stopped out at break even. And honestly, he needed to use these. He needed to do it like I did, right? You could have used these 2 candles together as the old bullish for value gap. Once this closed below, you would not have got stopped out at break even here. This would have been an amazing trade. The way that he did it, he got stopped out at break even. He kind of messed up with his execution, and he just didn't see that there was this giant liquidity pool here. Maybe he did, but he did not leave. Or he was targeting that, but he got stopped out at break even. So unfortunate that happened, but this really would not have happened if you took the trade like this. This is how I would have taken it, and this would have been a great trade. So nice job from Dodgy, even though it was a break even trade. We had this trade from Jay. I'm thinking that he took a lower time frame inverse here. So this is probably on like the 30-second or something. That's my guess. The thing about that is maybe he took it on the 15-second. After we take this liquidity pool, I'm not taking any more trades. Like, yeah, this worked, but I just genuinely, I mean, yeah, it worked. We targeted London's lows, but after we take this giant liquidity pool, like, you don't know if it's just going to go back up for a little bit. Maybe you have conviction that we're going to keep going down, right? But this was the clear and obvious liquidity pool to me, those equal lows. Where are we? Okay. that those equal lows were the obvious liquidity pool, and we did end up going further down, so that did end up working. I'm actually curious if we measure out the standard deviations of this. You can see how that 4 to 4.5 lines up with Asia's low. So you could have had a pretty strong conviction that previous day's low was the final target. If you measure out like this as well, this showing that we could go pretty far down. Anyway, Hydra didn't take any trades, so I can't feel that bad about not taking any trades because Hydra didn't even take any trades. He said, no trades for me. When I win, I feel nothing. When I lose, I feel nothing. When I take no trades, I feel nothing. It's all part of business, and that's how I should feel, even though I accidentally slept in. I just got to keep moving forward and not beat myself up about it. I know this was a good day to trade. We had really good price action, but I just got to keep moving forward and not beat myself up, even though we had such a good trading day. Like, I genuinely just have to keep moving forward, and that's all I can do. That's all I can do. And then, yeah, honestly, I think that about covers it for today. I think this is the trade of the day. I mean, this is like, this was the trade that basically most people took. You could have gotten an earlier entry up here, but after this, I mean, you had to get that entry because the rest of the day that we just kept going down. So anyway, I think that about covers it. If you guys liked this video, definitely consider subscribing, leaving a like, and joining my completely free Discord, and following me on my Twitter. So if you guys, I will see you guys in the next one. Bye.